Hey guys, welcome back to another video. Well, it's Monday, so that means that it's time for a market update and forecast. And this time around, I included a little bit more flatbed information that I could find. And on top of that, we're going to be looking at some lane information and how much do lanes pay for the three main equipment types. Now, if you're new to my channel, welcome. I teach about the trucking industry with a heavy focus on the spot market as well as freight market analysis. So if this is a topic that interests you, feel free to subscribe down below. So let's go ahead and jump into some numbers. Ready? Let's go. Now, before we actually get started, I want to mention one thing. I will be attaching all the charts I show in a link down below because I know it's sometimes really hard to see. So let's go ahead and get started with volumes because volumes are a big problem, especially this time of year. So I want to start with this chart, which I annotated in a bunch of different colors. But basically, this looks at the outbound tender volume index all the way from 2018 through 2023, through where we are right now. Now, what do we see here? This is where we are. As you can see, the volumes are actually higher than they were in 2019, in around February of 2019. But of course, they're much lower than they were in 2021 and 2022 in February, right? But what I wanted to do was I wanted to look at some patterns. You guys know me, I love patterns. So the patterns I see here in the white little dots here, every single time right before the new year, the volume sharply drops. This is true for 2019, 2020, 2021, 22, and 2023. Now, what happens after that is once the new year hits, the volumes sharply start increasing. Again, it's true for pretty much every single year. 2019, this is in the red arrow, right? And what happens after that is once they increase around the middle of January, and in February, they start doing a 180. They start going back down. The only time this was not true was in 2020 when they continued to kind of peak and only later on they dropped because of the closures. But this is exactly what has happened in 2019, in 2021, in 2022, and it's happening in 2023 as well. As you can see, we're making that U-turn. But why do I love patterns so much? Because they tell me that as soon as we get closer to around April or so, the volumes will pick back up again. Because this is what happened every single year, right? In 2019, and this is the blue arrow. 2020, then 2021, they were all the way up here. Even 2022. So we can expect that volumes will pick up again because of produce season. Now, even though this chart, this big chart shows us that volumes are kind of going down, if we zoom in a little bit, which is right here, it's the same chart, outbound tender volume index, right? But it's from 2023 until now. So it's just for this year. You can see that volumes were down on the 18th. And then they kind of picked up and plateaued, right? Maybe with ups and downs here and there. But that's good. They didn't sharply drop. Now, the problem is volumes tell only half of the story. They tell us what does the demand look like from the shipper side. What we need to know is what does the supply of trucks look like? How many dispatchable trucks are there? And the best way to look at that is to look at the tender rejection index. How many loads are contract carriers rejecting? Now, this is the outbound tender reject index. Unfortunately, as you can see here, this is February, right? And this is from the 20th of January. As you can see, tender rejections sharply dropped, had a small kind of dead cat bounce, and then just plummeted. This is where we are. Now, this is until the 4th because of the weekend, but this is where we are. We're at 3.65% when it comes to the national tender rejection rate, including all equipment types. So this is not good. Now, to show you that it's not good, let me show you a comparison. So again, if you can't see this very clearly, don't fret. It's going to be down in the link down below, right? So what we can see, this is again the tender rejection index, and this is for the past few years. So this purple line right here, I'm sure you can see that, that's 2022. The green is 2021, and the blue, this blue line is 2020. This is us right here, That's us. So what we can see from this chart, I'll leave it a little bit bigger, is that we are just slightly higher than somewhere in April, May of 2020 when there were shutdowns. So the tender rejection rates right now are just a little bit above that craziness that happened in 2020 when pretty much everyone started shutting down. This is not really good. And this basically means that, yeah, rates, they suck right now. Now, I decided to also look at the tender rejection rates for the 3 different equipment types, right? So this blue colored line is the flatbed. The green line is the reefer and the orange line is the dry van. Now we are right here, okay? So what you can see is that the flatbed remains to be above both the reefer and the dry van when it comes to tender rejection rates, which means that the flatbed gets a better rate per mile. But what is worrying me is the fact that since 2023 right here, the flatbed tender rejection index plummeted at a faster pace than the dry van or the reefer. So it actually went down by around, well, let's say around 12% since the beginning of the year. This is what worries me. So while flatbed rates are higher than both the reefer and dry van rates on a national level, this is really, really worrisome. But I guess we'll see what happens when the weather gets a little bit better. Okay, now for more specific data. Number 1, the van outbound tender volume index. Now, again, as a reminder, especially for those of you who are new, the bigger the square, the bigger the volume. The change in percentage is how much it changed from last week. Green means that it increased from last week. Red means that it decreased from last week. So for vans, in terms of volume, the best places for volume is Phoenix, Arizona, which increased by almost 85% from last week, which is insane. Then we have Dallas, Texas, and Houston, Texas. But again, volume doesn't tell us anything about rates. We need to know what the tender rejection rate looks like. So let's take a look for Phoenix, Arizona. So yeah, the volume in blue, it is all the way up here. It kind of shot up into the stratosphere. The problem is that the tender rejection in green is at a measly 0.4%. So basically, yeah, there's a lot of volume coming out of Phoenix, Arizona for vans. You're not going to get a good rate. Now, let's take a look at Houston, Texas. Now, for Houston, the volume shot up at the end of January, and they have been going down slightly. But again, the problem is that the rejection index is kind of in free fall right now, as you can see right here. Although it's much better than in Houston, it's at 3.94%. You can actually get a semi-decent rate from Houston during the week. But yeah, nothing to be too excited about. Finally, we have the Dallas market for the dry van. Now, even though it's the 3rd top market in terms of volume, you can see that in the end of January, volumes kind of went down. They're going up slightly right now. Now, the tender rejection rate is at 2.86%. So again, you're not going to get those great rates out of these places. Okay, now for reefers in terms of volume. The highest volume for reefers is number 1, Lakeland, Florida, which went down by 10% from last week. Then we have Allentown, Pennsylvania, which increased by 18% from last week. And then we have Elizabeth, New Jersey, which also increased by 13% from last week. But let's take a look at the tender rejection rates from these places. So for Lakeland, Florida, it's no surprise. Yes, it's considered to have pretty high volume, but let's take a look. The volume kind of plummeted down. It's in blue. And the tender rejection rate in green is at 0.91%, which means that you are not getting a good rate out of Florida. Now, let's take a look at Allentown, and Allentown is actually pretty interesting. I actually like the way this chart is going. As you can see, since February, the volumes shot up, and so did the tender rejection rates. I love that. Now, the tender rejection rates at the moment are only at 2.04%, but still, I like the trend. I really, really like the trend here. Finally, we have Elizabeth, New Jersey. The volume went up, and then around February 3rd, it started going down. Now, the tender rejection index is at 1.82%. So again, yes, there is volume in these places, but you're not going to get that amazing rate for the most part. Okay, I think something happened to my lighting, but it is what it is. we're going to look at the outbound versus inbound tender rejection rates. Now, unfortunately, this also does not include flatbed data because they simply don't have the data on this in Sonar, but I promise flatbed data is coming in just a few minutes. So for vans, the outbound tender rejection index tells us which places do dry van operators refuse to pick up the load from or are not willing to pick up a load from. So basically, from these places where the tender rejection index is high, the rate should be higher as well. So for dry vans, the top 3 places with the highest rejection rates are the same as last week: North Platte, Nebraska, Omaha, Nebraska, and Cape Girardeau, Missouri. Although all 3 of them actually decreased in terms of tender rejection rates from last week. Now, the question is, where are the highest inbound tender rejection rates? Meaning, where do dry van operators not want to deliver to? AKA, which destination will probably pay higher? Now, for dry vans, what you will see right here, for the most part, all of these squares and all of these little numbers here, and you will see them if you download the charts, they're pretty much the same. Now, if we nitpick, then technically dry vans don't want to go to Amarillo, I don't know how to pronounce it, I'm sorry, Texas. Then we have Omaha, Nebraska, and on the number 3 spot is Eau Claire, Wisconsin. So these are the 3 places technically where dry van operators don't want to go. But in reality, it looks like they're willing to go anywhere because there really isn't much variation between these different markets. But what about reefers? Well, just like last week, the highest tender rejection rates for outbound loads are in the Dakotas, right? In Bismarck, North Dakota, in Fargo, North Dakota, and in Sioux Falls, South Dakota. But where do reefers not want to deliver to? Well, it's no surprise. It's actually the same as last week. Pendleton, Oregon, they don't want to go there. Weather, I-80. Spokane, Washington, and Twin Falls, Idaho. But what I can see from here is that these inbound tender rejection rates actually decreased by quite a bit from last week. So reefer operators are more and more willing to go to these places despite the fact that the weather there is bad, which tells me that the market situation is not the best at the moment, which is not a surprise. It's February. Okay, now we have our 3D maps that I show for the dry vans and the reefers that show the tender rejections versus the volumes, but I'll do something different. After I go through these maps, we're going to look at lane-specific information for flatbeds as well as dry vans and reefers. So be patient with me. The flatbed info is coming. So this is for the dry vans. As you can see, and as a reminder again, the higher a place, the more volume from that place, the bluer the place, the more tender rejections happen in that area. So what you can see is Houston is actually not a bad market. There's a ton of volume and the tender at least it's blue. Okay, at least it's blue. There's some tender rejections happening. Now, Nebraska, South Dakota, this area, yes, the tender rejection is really high, probably due to weather, but there is almost no volume there. Good places are Iowa, Wisconsin is not bad, Michigan is not bad, Indiana is fantastic. Then the Tennessee market is pretty good for dry vans as well. The West Coast is horrible. Although Oregon is coming alive a little bit, it's becoming a little bit bluer right here than last week, which is awesome. Now this is for reefers. For reefers, what caught my eye right away? Of course, Idaho and the eastern part of Washington remain to have a pretty decent tender rejection index as well as good volume. But what caught my eye is that Southern California, which always has a lot of volume, it is starting to get bluer, which means more tender rejections are happening there, which is awesome. Now what you will see is in the Midwest, Indiana is fantastic. A ton of volume. The tender rejection rates are amazing. So try to end up in Indiana. Madison, Wisconsin is okay. Missouri is pretty good. The eastern part of Pennsylvania is pretty decent. And then we have Florida and Atlanta, Georgia, which have a ton of volume, but nothing to choose from. Okay, now let's go ahead and go to my computer screen and let's look at some lane information. So one of the things I have never shown you guys, and I think this is really, really important to share, which lanes pay the highest. So at the bottom right here, you will see this is for dry vans. This is the 7-day van rate per mile, according to Truck Stop. So let's take a look at which lanes pay the highest. So Let's see. So the darker green it is, you can see right here, the darker green, it's over $3 per mile. The more red it is, the less it pays. So let's take a look at which lanes pay $3 per mile. Okay, so what I did here is all the green lines are those that are paying more than $3 per mile for a dry van. So let's zoom in here. Well, number one, you will see that the Los Angeles to Las Vegas pays about $3 per mile, which is wonderful. Now, pretty much all the $3 per mile loads are closer to the East Coast. For example, Lewiston, Maine to Newark, New Jersey, Allentown, Syracuse to Hartford, and so on and so forth. You can see that for those short loads, you can get those $3 per mile, especially on the East Coast, as well as from the Midwest. Milwaukee to Indianapolis, we have Chicago to Cincinnati, Chicago to Detroit. Now, the red and orange lines are all of those loads that pay less than $2 per mile. And as you can see, the longer loads will pay less than $2 per mile for the dry van. So for example, let's take a look at this one. From Portland to Los Angeles, $1.37 on average. From Salt Lake City, Utah to Los Angeles, $1.35. From Chicago to Los Angeles, $1.91. From Dallas to Los Angeles, $1.60. So you can see the longer lanes usually pay worse. Of course, going from anywhere in the East Coast to somewhere closer to the Midwest will also pay less. Now let's do the same thing for the reefers. I'm going to make a map with places that pay over $3 per mile all the way up to $5, as you can see, and lanes that pay less than $2 per mile. Okay, so you can see for the reefer, all the lanes that pay over $3 are right here on the eastern portion of the United States, and of course a lot of them coming from the Midwest, quote unquote. Although there are some loads like from Los Angeles to Las Vegas that pays almost $4 per mile. A lot of things from Laredo to Houston, to Dallas, and to Fort Worth areas. These are short loads. They pay very, very well. Now, the longer loads here, for example, from Los Angeles to Dallas, they pay less than $2 per mile. From Dallas to Los Angeles, also less than $2. From Portland to Los Angeles, whoops, you can't see that. Portland to Los Angeles, $1.67. And there are some lanes here as well. Memphis to Chicago. We have Atlanta to Cincinnati. Basically, going to the Midwest doesn't pay very well unless you're already in the Midwest. But here, the shorter loads pay pretty good. Basically, the Midwest and the East Coast shorter loads, this is where you're going to make your money. Now, let's go ahead and look at the flatbed rates. So for flatbeds, unfortunately, I do not have that 3D map. It's not available for flatbeds, but they do have the lane information. I'm going to put in all the lanes that pay less than $2 and those that pay over $3. So for the flatbed, it's a little bit more interesting. I could only find 2 lanes that pay less than $2 per mile at the moment since last week, and that is Phoenix to Los Angeles and Los Angeles to Dallas, okay? Everything else, and mostly again in this area right here, it pays over $3 per mile. Now, a long load like from Indianapolis to Dallas is great because it's a long load. It pays $3.13 per mile on average. There's also this long lane from Chicago to Denver, from Denver to Salt Lake City, Utah as well. Basically, what we can see is mostly it's shorter loads going from the Midwest to the East Coast that pay the best. Well, this is basically what we looked at, but I wanted to show you on the map so you can see or visualizes where the best places are to get a good rate per mile and where the worst places are. But basically, this is for the dry van. You can see that the best lane is from Elkridge to Hartford, $3.93 per mile. Again, this will be down below. Syracuse to Hartford, $3.73. Then we have Harrisburg to Westfield, Massachusetts, and so on and so forth. The worst lanes for dry vans are Phoenix to Los Salt Lake City to Los Angeles, Portland to Los Angeles, Dallas to basically the West Coast. Just stay away from the West Coast if you have a dry van. Now for reefer. For reefer, rates are higher than for a dry van on average. Syracuse to Hartford pays $5.18, even though it decreased from last week. And basically we have a lot of East Coast loads pay very, very well. Short runs on the East Coast this week will pay pretty well if you have a reefer. Worst places to be is, of course, let's see, the worst of the worst is Portland to Los Angeles, $1.67, Atlanta to Dallas, Atlanta to Cincinnati, Dallas to Los Angeles. Just stay away from here. Now for flatbeds, I'm really excited. For flatbeds, of course, the rates are very, very different than for dry vans and reefers. Pretty much everything is over $3 per mile. As we can see, best paying lane, Jersey City to Winchester, Virginia. Then on number 2 spot, Cleveland to Winchester, Elk Ridge to Hartford. Seems like this lane is good for all 3 equipment types. Harrisburg to Westfield, Massachusetts. Worst places, there are only 2 lanes that I found that pay less than $2 per mile. And that is Los Angeles to Dallas and Phoenix to Los Angeles. If you have a flatbed, stay away from the West Coast, especially California and Arizona. Okay, finally, the diesel map. As always, I show this every single week, not because the map itself changes, but because the prices here change. The West and East Coast are those states where the diesel prices are highest. In the middle of the United States, the diesel prices are the lowest. And this week, diesel prices go from around $3.91 to $5.69. Now, last week, this number right here was, I believe, at $4 per gallon. So diesel prices are going down, and you can see that on this chart. So some good news, yay! This is the actual price per gallon. And you can see that since February, diesel prices have been going down, which is amazing. So I have nothing really else to add in terms of my own experience, but something that I do want to note, and this is important, do not get stuck without a load on a Friday, Saturday, or Sunday, or you will be stuck for 3 days. Yes, this almost happened to us, but somehow God smiled upon me and sent me a miracle load. But this is a crazy story for another video. Anyway, guys, I hope you enjoyed this video, and I'll see you in the next one.